haven't really talked about the Bank of England decision yet yesterday. An astounding 2 rounds of voting. This also coincides with a Banxico vote that was also a split vote. Seems like monetary policy is not clear on what to do here.
No, and I think uncertainty is one of the key words that we're hearing, all around at the moment. Bank of England yesterday, they really couldn't decide. It was a very, very finely tuned decision, as Andrew Bailey put it afterwards, with, you had quite a lot of the Monetary Policy Committee voting to keep rates on hold. They ended up, voting for that 25 basis point cut, which was what an economist unanimously expected. But they did not expect the split that we saw. And they certainly didn't expect, I think, that sort of push towards holding rates, the concerns about inflation that were noted, throughout the press conference afterwards was really quite notable. They even had a separate box in their statement, about particularly food inflation. And that really is an area of inflation that impacts consumer sentiment. And so it can affect sort of future inflation expectations. So I think there was quite a lot of concern there. There was definitely a bit more of a hawkish tilt than we have seen. And so that actually means that you've got the markets reducing their bets on future cuts from the Bank of England, although they stuck to their guidance for a gradual and careful continuing sort of rate of monetary easing. It did sound a little bit more hawkish. We saw markets reducing their bets, and actually that's benefited the pound, and it sent lower end gilt yields higher yesterday as well.
Yeah, and I just want to talk a little bit about how that reads through to the market. A more sort of conflicted, shall we say, Bank of England going forward. What does that do for sterling? What does that do for stocks in the UK? Well,
yeah, as I said yesterday, the pound did rise. Yeah. This morning it's a little bit off, but we went back above 134 as the market pared back those rate cut expectations. I think what's quite interesting, though, is you've got to remember that the pound, does trade inversely to the dollar, and we've got the opposite happening over with the Fed, with expectations now mounting that with the direction of the sort of personnel at the Fed, that we're going to see a more dovish tilt, that those rate cuts will keep sort of reignite. And so I think a lot of what happens to sterling will actually be determined by what happens to the dollar going forward. But in terms of, for sterling itself, I think it is a positive, and we could then see that it going higher still if particularly we get a weaker dollar story at the same time as we've got a slowing Bank of England.
Morwenna, we've got about 30 seconds on the clock. Talk to us about how much of expected rate cuts, whether it's the BOE, the Fed, or name your central bank, is actually a tailwind to the stock market that's dealing with volatility, it's dealing with uncertainty, and ultimately tariffs.
Yeah, well, it's very interesting, I think, for the FTSE 100, which I would like to say is still outperforming both the US and European stocks so far this year, because actually it is incredibly internationally focused. So it doesn't like a strong pound. But equally, a lot of them also earn their revenue in dollars now. So actually, I think it depends. You might see the mix shift, but that higher sterling isn't necessarily a good thing for the FTSE 100 unless it's tariff-driven.